Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Hello and welcome to the Mineral Rights Podcast. I'm your host, Matt Sands, and I'm joined by my co-host, Justin Williams, and we're here to help you make the most of your minerals and royalties. So this week, we're going to talk about what to do when you receive a division order. And before we hit record, we were talking about the fact that we've covered this topic in the past in a couple of different episodes. We're going to combine that all together into sort of a checklist for when you receive a division order. What are the steps you need to take? What are the things you need to do to make sure that you're going to get paid correctly and that you're protecting your interests? And I know, Justin, we talked about this very early on. And in fact, I think the first one where I talk about how to calculate your net revenue interest was maybe one of the first episodes that you had joined. It was right about that time period when Justin joined the show. And then also episode 16, what you need to know about oil and gas division orders, which is more what they are, what they do. And it wasn't so much on, okay, here's step-by-step how to deal with it. And this is one of the most common questions I get, from clients, Justin.
Yep, it's an important step, Matt, and it's something that reoccurs. So, as a mineral owner, we deal with this ongoing, and it's something that we have to be careful to double check because it sets a precedence and it's a legal document we sign and sets the payment going forward. So it's for good reason that it's a good question, but yeah, it comes up a lot.
Yeah, it comes up a lot. Hopefully, if you're in the fortunate position of having new wells drilled on your mineral rights, you'll eventually get a division order. And so, we'll gloss over the high points of what it is and that kind of a thing. And so go back and listen to episode 3 and episode 16 if you haven't already, because we go into a little bit more depth about what it is. But Justin, do you want to go through first about what a division order is specifically?
Yeah, let's hit the high points. So a division order is a legal instrument that documents your interest in a well, and then for any products sold from that well. The document gives the oil and gas operators, they use it to distribute the revenue to all the interest owners to confirm and have you confirm that your interest is correct. Gives you a chance to verify that interest the operator has come up with. It's not a modification of your lease terms. So people often get caught up in that. It's just to confirm the interest before they start payments. And that document outlines your decimal interest, the effective date of production, payment timing, minimum payment amounts, information like that. And we typically receive that, like you said, Matt, about the time that we're going to start to see checks coming from. Well,
yeah, that's right. And the key thing there, like Justin mentioned, is it should not be a modification of your lease terms. And so it's very important to review the language in that division order to make sure that it is not going to affect something you've negotiated in your oil and gas lease and walk back some of those provisions that you've negotiated for. And so that's important. And I think that if you look at the division order and if you're uncomfortable with any of the language that's on it, this is something that I think it's important to understand that this is somewhat negotiable instrument in terms of those concepts. Some of the things that are not negotiable that are actually in statute often, in certain states, it'll say what your division of interest is, the payment, amount perhaps is set by statute and you have some level of ability to influence that. You can elect to get a lower amount. So in other words, you get more frequent checks. So for example, in Oklahoma, you can elect to get paid at the minimum threshold of $25. So once your royalties accumulate up to a $25 amount, they'll issue a check. And so that way you can get paid more frequently. So that's important for very small interest or a well that's a low producing well, because sometimes if you don't negotiate that lower payment amount, you only get paid once a year. Once it reaches that minimum threshold, maybe it's $100 or whatever it is. Alternatively, if you didn't negotiate that lower amount. Now that's not a huge deal, but again, it's kind of a nice thing to do up front. So as that well declines and gets lower and lower, you keep up with it. You get that kind of regular check, and that helps to ensure that everything, from a checkpoint standpoint, yeah, this is still in pay status. I'm getting paid. I get that check. Sometimes if it goes a year between those checks, you can forget about it, or you don't have that trigger. So big thing, if you're unsure about what language should be included in a division order, again, go back to episode 16, and then we'll drop a link in the show notes for the National Association of Division Order Analysts, NADOA. they have a model division order form that I like to use as a reference. If I get a division order, I look at that NADOA model division order form to make sure that only the language that's in that NADOA form is what I'm agreeing to or including in the division order that I'm signing and sending back to the operator. So that's a great checkpoint. And if there's any other clauses in there that you're uncomfortable with that seem to like influence liability, like warranty of title, this is something you definitely want to cross out. Now, certain things will happen as far as if they overpay you. If they pay you the wrong amount, they're entitled to make prior period adjustments. So that means they, on a future royalty check, they could go back and subtract out the incorrect amount and then pay you the correct amount based on, audit results or gas plant statement when they finally kind of settle on the actual accounting for that well, or if maybe they paid you the wrong amount based on the wrong decimal. And so that's something you have to deal with. And it is what it is, but there's other things that you don't want to agree to. And again, that NADOA form is a great reference.
You said it, man. And, when you would typically receive a division order, we've mentioned that it's typically when a well begins producing. That may come from the operator, may come from the first purchaser or the marketer. Usually includes some kind of directions or a cover letter explaining what to do, what to fill out, what to return. May come with that W-9 form for tax purposes. And not only is it when a new well starts production, but if there's a change in ownership, if there's a change in operator, just a change in who that agreement's between, you may see a division order that needs to be re-executed for that.
Yeah, that's a good point. And I think that's important to review at those key milestones. Whenever you get a division order, it's important to sit down, take a look at it. It becomes easier if you already have gone through the detailed process of calculating your net revenue interest and, assuming it's correct and you've signed it and sent it back. Well, if that operator, like Justin said, sells that lease or sells that well to another operator, that new operator will issue you a division order to confirm your decimal interest because, they need to make sure their pay deck is correct. And this is a kind of a side note here. Everybody on that pay deck, and a pay deck is basically the division of interest for a well that indicates how the proceeds, from any sale of oil and gas need to be distributed. So in terms of the division of interest. So all of that has to add up to 100%. That starts with the operator's working interest and their net revenue interest based on the oil and gas lease royalty rates that are out there that they've agreed to. That kind of aggregate amount, that's their part on the working interest side and the leasehold side. So then on the other side of that, you have the non-operated working interest partners that all have a portion, and then you have all the mineral interest owners that have a percentage of the revenue from the well, and all of those people will get a division order. And again, like Justin said, they determine that by going through and getting a title opinion on that interest, is just to make sure that they understand who all they should be paying and how much. And so that is a very thorough process. So typically these are very accurate. And so we may have an idea of what we own. If there's a discrepancy, we'll talk about how to deal with that and when you review your division order and how do you calculate your net revenue interest. But just to know that this is a very thorough process they go through to determine who owns what, who should be getting paid what, and all of that's documented in that division order on the revenue side of things. And then, like Justin said, another important aspect with this is if you get it from a new operator or even on a new well, usually that'll be accompanied by a W-9 form for tax purposes. And it's important that you return that W-9, you provide your taxpayer ID, because if you don't, they will withhold what's called backup withholding. So basically they'll withhold your income tax amount based on just a fixed, statutory amount. And that's not something you want them to have to hold on to and have to settle up with the IRS when you file your taxes to get a refund, for example, if they withheld too much. I'm of the opinion that it's better to get paid the full amount, and then on your end, you need to set aside a certain amount of that because you're going to owe taxes on those royalties. Typically, again, income tax is not withheld from royalty payments, and so that's where that W-9 comes in, just to make sure that you don't get that back withholding or that mandatory withholding. So you want to return that at minimum. Now we'll talk about key components to review, and then whether or not you actually need to return it. In some cases you don't, but we'll talk about that as well. So Justin, let's go through high level. What are the key things we need to look at in that division order when we get it?
So first and foremost is the owner name and contact information. So with this, you're not just looking at, is it my name? Is this an entity you expect it to be? If you have an LLC that you manage the minerals within, if the mineral should be within a trust, if there is a trust that has had some conversion triggers, maybe somebody passed away and when trust converted to a certain entity through another entity, you're really looking for that to be the proper entity and can trigger a need to change ownership or highlight that at least. The property or well name, legal description needs to match that deed and lease. Your decimal interest or your net revenue interest, NRI, is the most critical element and really where you'll spend your time trying to verify that decimal percentage of ownership. The type of interest is a royalty interest, an overriding royalty, a working interest, etc. Payment timing and minimum amount. Matt mentioned this earlier. Often this is $100, but this could be negotiated if it's a smaller interest and you want to receive that check more often. That's something you can talk with the operator about. And then sometimes there's signatures requirements. Sometimes witnesses are needed depending on the form that they're using. And then again, tax identification requirements to avoid that backup withholding. Sometimes the division orders ask for a social security number on it. Sometimes they ask for a W-9 and provide that to you. They can come in different flavors.
Yeah, so those are the key things to take a look at, or the key things that will be on that division order. The most important thing, again, is that net revenue interest. And that, in other words, is the decimal interest or the owner interest you'll see on your revenue statements. And it's basically a pretty simple 3-step process that you need to go through. This is a standard pooled unit that we're going to go through this example. And again, go to episode 3 where we talk about this. We'll link to that in the show notes where you can see it in writing and see how we work through this calculation in writing. It's pretty straightforward in the case of a pooled unit. Now, one thing I will say is if you're at the point of getting the division order, you will have at some point in time likely leased your minerals. Now, the exception to that is if you were force pooled. But either way, you will have gotten an offer to lease. And in that offer letter or in the documentation, your lease packet, you'll have a letter there that explains how many net acres that you own in that particular tract that's part of that unit that well is producing from. That information is critically important to determine what that decimal in that well is. In other words, that percentage of the proceeds from the sale of oil and gas that you should be getting paid. The way that you go through calculating that is by the gross acres in your tract. For example, if we owned an undivided 1/4 interest or undivided 25% interest in a full 640 acre section, that would be 640 times 1/4, and that's equal to 160 net mineral acres. So in this example, if I had gotten a lease offer, it would say, okay, you have 160 net mineral acres. We're going to pay you $1,000 per net mineral acre for the lease bonus amount for a 3/16 royalty. And that would be in that letter. You sign the lease, you go through the negotiations, all of that. You get your lease bonus, and then several months or maybe a couple of years goes by, and then they actually drill the well, and then you get this division order. Now, this is where you want to go back to that paperwork you got with that lease. So this is why it's important to keep all of these documents and organize them. And, we'll link in the show notes as well on how to organize your documents to make sure you have this stuff and keep track of what's important. But basically, you dust off that letter, you look and say, okay, yeah, I have 160 net mineral acres. That's right. That's how much I own. Then you have to go for the wells that you're getting paid on in the future based on this division order. You need to go to the State Oil and Gas Commission website to research those wells and pull up the plat and the permit that will show you the drilling spacing unit, the DSU, or the unit size. That'll be on that permit or the plat. In this case, for hypothetical purposes, let's say we have a 1,280 acre spacing unit. In other words, 2 sections, which is kind of a common horizontal drilling spacing unit. And that means that basically our minerals, that one is 1/2 of that, 640 acres out of the full 1,280 is what we actually have. So again, we would find that pooled unit size based on the well permits. You sometimes may have to go to the spacing order or the pooling order for that well or for that section. That'll have information about all the acreage that's included in that unit that they created. This is more applicable to states where there's statutory pooling. So think Oklahoma, Colorado, Wyoming, and different states like that where there is statutory pooling. We'll talk about what to do and some of the other use cases or other exceptions to that here in a second. So we know our net mineral acres is 160. We know the drilling unit size is 1,280. We know our royalty rate from our lease that we signed, that we kept a copy of, is 3/16, or that's another way to describe that in decimal and a percentage form is 18.75%. So to calculate what our net revenue interest or our decimal interest is in that well would be 160 divided by 1,280 times 18.75%, which equals 0.0234375. So that 0.0234375 is the number that should show up on that division order for that well, or for all of the wells that are in that drilling spacing unit that were just drilled. So that is how you go through the process of calculating that decimal interest and making sure it's right on the division order. Again, it's pretty straightforward for a case where you're dealing with a pooled unit like I just described. There are definitely other exceptions to that. And so, Justin, we talked about these different documents you need to go through that calculation. Do you want to talk about how you go about finding those documents?
Yeah, you said that. And I think that's where a lot of people get tripped up on this. It's following the steps, or it's not a terribly hard formula to follow, but you do have to have all the information. And, the State Oil and Gas Commission websites for well information like drilling spacing unit information, county clerk and recorder offices for ownership records. In an ideal world, as a mineral owner, we have all these documents stored, but it's very possible if this is a new well or a new property that you may have to go do that research and find those documents. There's also online platforms like Mineral IQ or Well Database for well data, calculators and spreadsheets like the one that Matt put together for NRI calculations. It's a great tool and I use it all the time. Matt, I'm sure you'll link that in the show notes. And then professional help. If you're not comfortable doing the ownership records, if you're not sure how to go find those, a landman, an attorney specialized in oil and gas can be your best friend with this. And then last but not least, this is all new to you. It's really important to build a foundation. This is just one of the many touch points that you'll have. And an online course like Matt's Mineral Management Basics is a really great place to start to build your fundamental knowledge as you start to manage this. And Matt, this is one of the first things that come up. It's also one of the things that comes up somewhat often, but not often enough to make it stick. And so having that education resource that you can go back to and reference is really handy. And if you're not sure what documents you're supposed to be putting together, again, work with a specialist, whether that's somebody like Matt, that's a landman, if that's an attorney, get somebody to help you out, especially if it's your first one, or if you don't feel like you can confirm this information. This can set the payment terms for a long time to come, and changing these can be pretty difficult. So better to be careful and sure first.
Yeah, and certainly you can go back and change it if you find that it's incorrect. But the issue is if you wait too long, there's statute of limitations. So you may have lost out on some revenue if you wait too long, or if you don't find out about it until several years down the road. So, best to get it correct up front. And like Justin said, the key things you need to do is be able to do a title search to maybe pull up a copy of your lease if you don't have a copy of it, for example, or to look at, in this case, when you get a division order, usually you'll have leased and you'll have that information. But let's say you don't. Let's say that you've inherited these interests and your ancestor, your grandfather or grandmother or something signed a lease back in the 50s or 60s for some vertical wells that are still producing. They come in and now they're drilling horizontal wells. You don't know how many net mineral acres you own. You would have to go do a title search to trace that chain of title back all the way from patent, so when that land was originally granted to somebody, to present day, to figure out what's the fraction that you own in that mineral tract. if you don't have that information. So if you don't know how to do that, I show you step by step in my Mineral Management Basics course how to perform a title search. And then once you've done that, you have your legal description, how to decode that, how to understand that and find those interests on a map, and then how to use the State Oil and Gas Commission website to find those plats and well permits and pooling and spacing orders like we mentioned. So that is something I walk through step by step in my course. And so we have videos both on my YouTube channel, which we'll link to in the show notes, as well as in the course. So all of that's in one place, as well as a lot of additional information that walks through and shows you step by step how to do these things. One thing I will say, like Justin mentioned, I have lots of tools and resources I put together. You can download a free copy of my net revenue interest calculation spreadsheet, which again, we'll link to in the show notes for this episode. So you can download that. So when you get the division order, you can enter your information and it'll help you calculate that. So that's a great resource as well. And that's free for everybody. So Justin, let's talk about some of those special cases and considerations that maybe may come up in, different situations.
Yeah, so the standard practice and the standard information typically covers pooled units, like you would see in Oklahoma, Colorado, Wyoming. There are other allocation wells. There are Blanchard interests in Oklahoma. Multiple wells listed on one division order can sometimes really trip people up. And then there could be changes over time, non-participating royalty interests, and then different state laws regarding division orders. These are kind of the common traps that people fall into. And so the information is really not one size fits all, but you have to know a bit about the state that you're in and how that's typically done in the state. So Matt, we talked about Blanchard interest in episode 179. These are specific to Oklahoma, but certainly change the way that you would calculate this information. And same with allocation wells, though allocation wells aren't a ton different. It does change it a bit. And Matt, what would be your advice to somebody who is trying to figure out what set of rules they should be following?
Yeah, it's very state dependent. Again, if you're in Oklahoma and it mentions a Blanchard interest on your division order, what that means is you'll have sort of two numbers. You'll have the statutory or the minimum royalty of 1/8. And then if there was a lease royalty rate above that, it'll be the Blanchard royalty. So in the example I gave earlier where you had a 3/16 royalty, on the Blanchard interest, you'd have a 1/8 plus a 1/16. So you would need to add up those two things. Another unique situation sometimes is that you inherited interest into multiple mineral tracts, and maybe those multiple tracts are part of that same pooled unit. You would need to do that calculation for both tracts, and then you add that up. And sometimes you'll get on your division order and on the revenue statement, two line items for each well. You'll have one for the first tract, and then you'll have the second item or the second list of payments for that second tract. If you add those two together, that's your total, and sometimes they split it out. So just be aware of that if you have interest in multiple tracts that are part of the same pooled unit, or if you have a Blanchard interest. Now, like Justin mentioned, another unique situation that is part of the fund that we deal with in Texas are production sharing agreements, or that which is a PSA or a allocation well. And the reason for those types of interests is because there's no statutory forced pooling in Texas. They have this way of kind of getting around that to ensure that they can pool different tracts together for horizontal well development. So with an allocation well in Texas, because you're dealing with multiple tracts that are pooled together, what you end up having is basically the lateral length that goes through your tract. That fraction compared to the overall length of that well is what you get paid on, and that proportional share. So it gets a little more complicated. It's oftentimes good to get help from an expert if you're dealing with a PSA or allocation well in Texas, just because it can get a little more complex as far as how you calculate your division of interest. The other thing that you need to keep in mind is if you have non-participating royalty interests that are burdening your oil and gas mineral rights. And what that means is basically that someone in the past has granted a non-participating royalty interest to somebody, and that'll reduce the amount that you get paid. And so you may not know that unless you do a title search to find that out. Now, if there's anything that as you get in through doing those calculations, if your numbers don't match up with what is shown on the division order, ask the operator how they came up with that calculation, and ask for proof or the documentation to support how they came up with it. And sometimes you can ask for a redacted copy of the title opinion that just relates to your interests. So just the 1 or 2 pages from that title opinion that mention your interests specifically. Sometimes they'll share that with you, and that's very helpful in understanding how they came up with that decimal. And, coupled with all the information we've already talked about, if you get that information from the operator, and if you're still having a hard time figuring out how they came up with that, then you can get help. So, Justin, you want to talk about other cases when to get professional help with handling a division order?
I know for me, Matt, unclear pooling or unitization language has caused me a lot of headache. And sometimes that takes an attorney or an engineer to be able to look at the property and see why they did what they did exactly, and be able to break down the way that they unitized it and what formulas should be used. It's also possible that there is a multiple party or a really complex ownership kind of baked into this property. And in my experience, that can be something that you're privy to. It also could be something that it just doesn't look right when you get your division order, or you can't get the formula to come out quite right. And then significant potential revenue at stake. So, Matt, that kind of goes back to the large discrepancy in a decimal interest issue. But if you're dealing with a property that has a huge ownership and a 10th of a percentage makes a massive potential revenue implication, that is the perfect time to ensure that you get an attorney involved, an engineer involved, and really do your due diligence to make sure this is correct. And then division order includes unusual clauses or requirements. That's something that was a lot of talk back in 2010, 2012. People were trying to put these clauses onto division orders. And depending on the state, that may or may not be legally binding. But anytime you see those unusual clauses, as we mentioned earlier, the point of the division order is not to change your lease. And so any attempt to do so on the division order should certainly be addressed. There may be some terms that are appropriate, but that is certainly an attorney question. And any time that you kind of come up on something that's just not the routine, it's a good time to talk with an attorney, a good time to talk with an engineer to get clear on why it is this way. And don't hesitate to go back to the operator. When you receive this division order, typically you're going to have the contact information for the division order analyst. This person is going to be aware and in the know. And so they're a wonderful person to talk to, because in the case of a strange unitization, maybe multiple parties or complex ownership, they'll bring a lot of information to the table. Whether you're working with an attorney or doing this yourself, they're going to be the person who really understands the pay deck on the operator side.
Yeah, that's all excellent advice. And I will say, if you get to the point of going through this, you get into that unclear language, multiple parties, it's not making sense, that's when to hire an attorney or an expert to get help with that. I will say this is one of the most common things I help my clients with, for those that I'm helping them kind of as a advisor in managing their interests on their own. When they get that division order, that's such an important step that's oftentimes when I'll help them walk through the process of checking to make sure it's all correct and looking at the language and things like that. So the one thing to keep in mind, when you look at the decimal, I've also gone through this process where I had a complete picture of everything. You get down to that decimal interest and it doesn't match to the 8th decimal place. So these will be to the 8th decimal place. So that means there'll be a decimal and then 8 numbers after it. That's the level of accuracy they get to. Now, where you get into particular discrepancies is if you assume, if it's 2 sections of land, let's say, you assume 1,280 acres, but maybe one of those sections is slightly smaller or slightly larger, the numbers won't exactly match up. So you may need to go back to the state information, to the survey, to look at the actual acreage of the tracts that are included. Or in particular, if you have interests like on the north half of a section, sometimes they'll be irregularly sized lots, and they'll be referred to as a lot instead of like the northeast quarter of the northeast quarter will be lot 1 or whatever. And so in that case, maybe it's slightly smaller. It's maybe 39.08 instead of 40 acres. And so all of those things kind of add up. To put it in perspective, for every $1 million of revenue, if there's a discrepancy by one, number at that 8th decimal place so in other words, by 0.00000001. So if you're off by that small amount, it's only going to be 1 penny for every $1 million of revenue that well generates. And so At some point, there's a diminishing returns if you're off by just that very small last decimal, or that last number is off by, a couple. Put it in perspective, depending on how big your interests are, how much it's worth chasing that penny, so you could spend hundreds or thousands of dollars to get down to that last penny that you're going to get back. So just put that in perspective as you weigh all of this. And if it's pretty darn close and your interest is very small, then talk to the operator, find out exactly how they got to it. And if it's a reasonable explanation, and just understand that you could go get help, but it's also going to cost you probably more than you're going to get if it's incorrect, or if you need to adjust it by that very small amount. Now, that said, if you think you have a much bigger amount and it's coming out to a lot smaller, could be that you're missing something in that chain of title. Getting a copy of that redacted title opinion will help you understand how it was passed down, and maybe there's something in there that you weren't aware of. That's very common. Or if you think they just got it wrong, they interpreted a trust document incorrectly, or because all of this is an interpretation by an attorney, so there is some subjectivity. If you have some other, or your attorney has another interpretation of that, that's definitely time to go and protest it and find out if you can provide some additional information to them so they can update their paydex to make sure it's correct. So one thing I will say, there's some common mistakes to avoid. So Justin, you want to walk through what those are to make sure we're, headed down the right path when we get our division order?
Yeah, absolutely, man. So assigning without verification of the decimal interest, that is the number one. And I would hate to know the percentage of division orders that the mineral owner didn't confirm the decimal interest. We don't even have to talk about it. Not updating contact information or ownership changes. This is also really common, Matt. I've fallen into this trap accidentally by having to deal with a living trust and then a trust after death. And though it can be the same name, it can cause a lot of issues at tax time if it's not handled properly. So really keep your eye on that. Missing deadlines. So when you receive that division order, it is on the mineral owner to execute that, return that to the operator. And that is what they're looking for, to check the box so that they can move your interest to pay status. I think folks receive these division orders sometimes, they sit on them, but then they don't understand why the checks haven't continued to come in lieu of returning the division order. This is not always the case depending on state law, but there are some states that will withhold the payment until they receive that division order, ignoring any minor discrepancies that can add up over time. As Matt mentioned, it may not always be an attorney question. It may just be going back to the operator or the division order analyst and saying, hey, how did you come up with this? Because I can't get the same number. Or, hey, will you please walk me through how you came up with this interest? Assuming that all division orders use the same language, don't do that. That NDOA form is a really great resource to see what should be on this, what does the basic look like, and at least to tell you, hey, this is extra. Maybe I should look into this. And then last but not least, keep the division orders. You'll be glad that you did, both now and in the future. And Matt, something that I know that I hear a lot about people getting tripped up on is changing in decimal interest on division orders over time. This can be really hard to understand why this might happen. But there's a ton of scenarios, but Matt, do you want to mention a couple scenarios where, a change in division interest or decimal interest over time might be a normal scenario?
No, that's a great point. And it could relate to, and particularly it's with non-operating working interests or, something related to the leasehold. So sometimes you can get a reversionary interest. So what happens is you have a certain amount that, in that case, it'll go to a higher amount. So for example, if you farm out some of the work, you're giving them some of your interest, and then when they get their money back in a certain return, then you'll back into your original percentage. Another time that's, I think, more common for mineral and royalty owners is if you're force pooled. So in that scenario, like in Colorado, for example, if you're force pooled, you get a statutory minimum royalty for oil and a statutory minimum royalty for gas. And then once that well reaches payout, in other words, once they get the actual amount that they spent on drilling the well plus a penalty amount because they had to carry your interest, then you'll back into a non-operated working interest. When that happens, you'll get actually your proportional share of the revenue plus your proportional share of the expenses, based on the full amount that you own, not just the royalty interest. So for example, in that case where we talked about the 160 net mineral acres, Well, if you had that statutory minimum royalty, and then once you back into that full non-operated working interest, it would be the 160 over 1280, which in this case is 12.5%. And because you have the full 100% interest, you're not burdened by a royalty, or you get that 12.5%. But then you're also paying your proportional share of those expenses. So that's you're paying the 12.5% of the expenses, and then you're getting the 12.5% of the revenue. So definitely a situation where that can flip and can change. And, in those very unique situations, you need to know that going in. If you elect to not sign an oil and gas lease, that's what you're getting yourself into. And then you need to understand the pros and cons of that. And if you're, we'll have some links into the show notes there for that scenario, because we talk about all of that in more detail in a couple different episodes. But yeah, I think those are probably the most common, kind of unique scenarios where that might change. Otherwise, if a well gets sold to another operator, that number shouldn't change. It should remain the same. And that's where you want to make sure, looking at your old division order, your old check stubs, comparing to the new division order, that those numbers should match. And if not, that's a red flag. You need to go talk to that new operator, find out how they came up with it. Oftentimes it's an error or an issue that they had in loading that pay deck into their accounting system, unless they came up with something there, they caught something that the previous operator didn't know about. So that is possible as well, but less likely.
Yeah, you said it, Matt. And that absolutely does happen. And again, ask the operator, have them walk you through how they came up with that information. They spent a whole lot more money on an attorney than you could or would. So they typically have a pretty clear idea of how they came up with that and why that they're proposing that that's interest. I think another thing, Matt, to mention with this is there is another potential point where things can kind of get mixed up and messed up. Once that division order is returned, the division order analyst puts that into the computer, approves it at the computer, however that works. Then it goes off to payment. That first check you receive should match your division order. If it does not, it is a good time to bring up concern.
Absolutely. Yeah. And then some of the things to think about as well, best practice wise, as you go through, having this all in one place and organizing your documents is important, so that when you get these division orders, you can pull out your lease, you can pull out your deed, you can understand what you own, you can do these calculations. It's a very simple and easy, quick process if you have that information at your fingertips. And so create a filing system. Again, that can be a physical file, in a file cabinet, or online. You scan these documents, upload them into OneDrive or iCloud or whatever platform you use, and make sure that you have, they're backed up to the cloud. In other words, if your computer crashes, your hard drive fails, you don't lose all that information. And that's where, again, if you're a Windows user, OneDrive comes in, or if you're a Mac user, iCloud are great because they're backed up to the cloud as well as a copy locally on your hard drive. We go into that in a lot more detail, again, in a couple different episodes, which we'll link to, on how to organize all that stuff. Like Justin said, I think the other part is important is to compare that over time, compare the division order with the check stub, and then compare check stub to check stub, periodically, just to make sure things are staying the same. Nothing has changed as far as that decimal interest. And then at the end of the year, we talk about how to do a quick end of year audit to make sure that the payments that you were paid match your 1099, for tax purposes. And so that's where you need to go through and just add up the total, those gross royalty payments, and that should match what you see on your 1099. And then another best practice is to keep track of new drilling activity near your property. If you're on top of this stuff, you will know that a well is being drilled or has been drilled, and you won't be surprised when you get the division order. In fact, you'll be, actually anticipating these and know that they're coming. There's multiple tools out there that you can use to manage your minerals that automate this. MineralSoft, MineralWare, Mineral IQ are all 3 different online platforms that will send you an email or give you a heads up, basically, when a new rig shows up within a couple of miles of your interests, or when a new well starts producing. And you can click through on those platforms or go to your State Oil and Gas Commission website to look at the detail and look at the production. That's the other thing, is doing those audits and doing a revenue statement audit and making sure the production that's reported to the state matches what's on your revenue statement. So again, we'll link in the show notes how to do that. But as far as some trends and, kind of wrapping things up, Justin, what are some of the developments that you see coming in the future as far as division orders are concerned? And then, as far as like regulatory environments, best practices, what are some of the things that you'd like to see in this space?
I think, like we have across the board in the digital world, we'll start to see digitization of division orders in the process. I'm sure that'll start with electronic signatures and then become an online process. This could streamline things a lot for both the operator and the mineral owners. There's also a lot of standardization efforts in certain states to ensure that we're using a model form like the NODOA, ensure that the terms that operators are allowed to place on these division orders are kind of standardized. And then kind of in a longer time frame, I'm sure that we're going to see some impact to division orders when it comes to like lithium mining and other wastewater produced minerals that might come with this. And I don't think division orders will go away, Matt, but they may change, they may modify. I think for the lithium world or for other wastewater produced minerals, it could be very different, or the terms may be very different. So keep your eyes posted on that. And again, if things are changing and you see some strange terms on your division order, it's a good time to reach out to an attorney. One of their free consultations a lot of times can answer questions when they say, oh, nope, this is normal. States changing requirements and regulations, but always good to catch that and be in the know about it.
Yeah, those are all excellent points as well. And I totally agree that it would be good to see electronic signatures. This whole process, you don't start getting paid in many cases until you return that division order. Wouldn't it be nice if we could do that, kind of instantly? You get the division order via email. It's a DocuSign link or whatever, and you can go in and just sign it online, which that's been accepted as legally acceptable as far as signing documents. So why not adopt that process for division orders as well? So for any of the operators that are listening out there, this is something that I'm sure many other royalty owners would love to see. It would make your jobs easier. Stuff wouldn't get lost in the mail. You less burden on your division order analysts as far as following up, and it would be easier. And royalty owners want to get paid as soon as possible. So definitely, would love to see that in the future. So a couple of things as we wrap up here. Just remember, when you get this division order, it's a great time to celebrate. Pop open that bottle of champagne. You're getting paid on a new well. Hopefully it's a very good well. And it's important that you take the steps to review that document before you sign it and send it back. Again, to make sure your decimal interest is correct, that the terms are not modifying your lease, that you've spent so much time and effort to negotiate, and then that you also understand the tax implications and you're taking the steps necessary to set aside the money for estimated tax payments, all of those things. Because, in the ideal world where you return that W-9, you won't have any income tax withholding. So you'll need to pay that throughout the year if it's substantial enough, or when you pay your taxes, you'll settle up with the IRS. So again, if you need help on, want more information on how to do this step by step, check out the videos on my YouTube channel for how to find information on your state oil and gas commission website. Check out my mineral management basics course about how to actually do the title research, how to read your legal description and find it on the map, and how to navigate those state oil and gas commission websites, all step by step. And then for the very unique cases, in fact, actually, when we hang up here in just about an hour, Jimmy Wright and I are going to be doing a webinar for the National Association of Royalty Owners on Texas and production sharing agreements, allocation wells versus forced pooling, how all of this stuff is handled in Texas. And so we'll go through some very relevant examples for how you calculate your net revenue interest. So if you have interest in Texas and you are not a narrow member, you need to join. Once you join, you'll get access to our library of past webinars. You can go back and watch this on demand at a later date, because this will be dropping after that webinar has occurred. So make sure that you are a member of Narrow. We'll link in the show notes a special coupon code that you can use to save some money on your first year of Narrow membership. It's a low enough price that really everybody should be a member. There's a ton of educational resources in addition to what Justin and I put out on this show. Both Justin and I volunteer with Narrow and are on the board, and it's a great organization. So definitely go check that out. And again, we'll link to that in the show notes as well. So thanks again for listening, and hopefully we've demystified some of the steps in the process for when you receive your division order and what you should be doing. And I look forward to seeing you in the next episode. Thanks.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.